Good morning and welcome. We're so glad to be here for Common Good Vermont's Finance Friday with Wendelyn Duquette, a subject very close to our hearts here at CCTV, managing programs with multiple revenue streams using QuickBooks. And we're very glad that Wendelyn has joined us today. And I want to welcome folks who are at home or at work on their computers watching us, and those of you who are here in Burlington, and those of you who are in Montpelier and St. Albans and Brattleboro and White River Junction. So welcome, and we're very glad to see you today. You can call with questions during the presentation at 862-3966. That's area code 802-862-3966. And there's also a chat box for those of you who are watching on live stream, and you can chat your questions right in there, and those questions will be brought to Wendelyn. So I just want to let you know, without further ado, we're going to go to Wendelyn. I just like to do just a quick plug. We have an event next week called Digital Rights and Responsibilities, and those of us who are here today know how important it is to have financial policies and procedures. The same is true for our digital data. And Lucy Bernholtz, who is an international presence in the nonprofit scene, will be here in Burlington, in Montpelier, and in Brattleboro next week for 3 half-day workshops talking about digital rights and how to govern and manage your practices. That is a workshop I would not want to miss. So thank you so much, Wendelyn.
Well, thank you, Glenn. I'm really delighted to be here, especially tackling an issue that I think stumbles a lot of nonprofit organizations and keeps them from being able to simplify the work that they're doing, the accounting work that they're doing, and let them get back to really the work that they're in charge to do, the missions that they're there to fulfill. So hopefully you'll all leave with a little, some ideas of ways you can make things simpler for yourselves. That's the goal. This is me. I founded QuickStart 20 years ago now, and we specialize in nonprofit accounting. I have a real passion for working with nonprofits. I love working in the mission-based organizations and helping them be more efficient. And we serve about 70 clients per year. And how do we do that? The most important thing we do and get called on most often is to help simplify existing accounting systems. We also do accounting system conversions, oftentimes organizations going from Blackbaud to something a little more simple, finding that that's more complicated than they need. Sage, Peachtree conversions. We also do QuickBooks training and setups for organizations. We do QuickBooks file checkups, so just like you would go to the doctors once a year to get checked up, we can check up your file and just tell you what it looks like. How's it doing? We have outsourced controller services, and we also offer board trainings. So before we get started, I want to clarify exactly what we hope to accomplish today for you. And the first thing is we want to define what we mean by programs and grants so that while we're talking through today, we're all on the same page. We're going to also talk about how to track programs and grants in QuickBooks and how to create reports, profit and loss reports for programs and grants. We also, in the process of this, and I probably should have made this an objective, an underlying objective amongst all of this is to get rid of something that I find in most of the organizations I come into, which is the over-reliance on spreadsheets to manage their reporting. So if you have a large number of spreadsheets that you rely on to do your reporting, either for your grants or for your programs, hopefully by the end of today you'll be able to see your way clear to maybe reduce some of those, maybe reconfigure QuickBooks so you don't have to use as many spreadsheets. The last third of the program today, we're going to talk about fund accounting in a broader sense. So grants and restricted funds is a part of fund accounting, but we're going to open it up towards the end to talk about fund accounting in general and QuickBooks strengths and limitations in reporting to that. Let me talk about how I got, before I get to this one, let me go back and just talk about how I came into this spreadsheet piece and tell you a story about working at the Lamoille Family Center. When I was about 4 or 5 years ago, I was called in to be the outsourced controller, and I was there for 2 years helping them. They had a really brilliant controller that had managed the organization's finances. Were in great place. They had good funding, good cash reserves. She had done a really excellent job. But on a quarterly basis, they were creating their grant reports and their reports for the managers of the organization. And they were challenged as managers to understand what the programs in their organization were doing. When they were running these reports on a quarterly basis, it took them 40 hours or more a quarter to run them, and they were relying on about 30 spreadsheets. By the time we were done and had reorganized QuickBooks to work better for them, we were generating reports that were very meaningful to the executive director and the board for their programs. They were getting grant reports that they needed on a monthly basis in 4 hours using 2 spreadsheets. So not every example is going to be that extreme, but that's the kind of enhancements and efficiencies we're hoping to create for organizations. So as we approach today, I made a couple of assumptions looking at the list of organizations that are attending here. And because of who is here, I know that we have a variety of accounting skills. There are some of you who have CPA backgrounds. There's some of you who are executive directors who have never taken an accounting course and are here because of the strengths of your passion to your field and the skills you bring to the organization in running them. We have a variety of organizational complexities. We have small organizations that may be under $100,000. We may have organizations here that are $1 million and larger budgets. So there's a variety here, and the needs are going to change depending on the size. So we're going to try and hit in the middle. We'll do the best we can. The other thing I want to talk about is nonprofit professionals and numbers. So for those of you who are program directors or who are founders of your organization or board members who come to this, serve in these capacities because of your passion and your skills with this, I want to dispel a little bit about the numbers thing. Oftentimes the accounting people just get sort of taken aback and they're afraid of looking at the numbers or just have a reticence to really dive in. And what I want you to think about with the accounting is not to think about the accounting as numbers or as math, but think of it as a language that tells a story about the financial health of your organizations. Yes, the characters happen to be numbers, but I want you also to know that all the math that's required to create the reports that you're going to generate in QuickBooks can be done on your phone calculator. So this isn't complex, it's 6th grade arithmetic that we're using, and the further advantage is that QuickBooks does all those calculations for you. So try and think of the numbers as a language, not as mathematics. And to reiterate what Lauren Glenn said before, we really encourage the remote participants, and there's many of you out there, to ask questions because we want to make sure you're getting your questions answered and add to the diversity of the conversation that we have here. So please do that.
862-3966, area code 802.
Thank you, Lauren Glenn. So next, there we go. So the issues and the challenges that I see in nonprofit organizations stem from 2 things. First, there are the 2 types of reporting needs that organizations require in the nonprofit world. First is there's program reporting, and this is critical to managing the effectiveness of the organization. That's how do your departments perform? How are your programs going? These are the things that you might report out if you're dealing with results-based accountability. They're the numbers that you're going to need to help evaluate how you're doing in telling your story. Then there's also grant funding reports, which are also critical in order for you to continue to access grant funds, either the current ones you have or new ones that you want to report to. And depending on where you sit in an organization, you're going to have a preference or a predominant need for one or the other. So if you're an executive director or a board member, you're going to be really looking to the program reporting. And if you're an organization where your QuickBooks file was set up by a program director or an executive director or board member, your files are probably going to report those functions better than the grant functions. If, on the other hand, like with the Lamoille Family Center, your QuickBooks file was set up by a controller, they're the ones who you've hired to make sure you're compliant with your grants. So they're going to lean first towards setting up the reporting to easily report out on the grant funds. And in the process, the program reporting might suffer. So depending on where you sit and what you were hired to do, you're going to be focused on one way or the other. And what is important is for both sides to understand that there's a way to do both and that both are important. So that's what we really want to focus on. So let's talk about terminology, because this does get a little complicated as we go forward, and we'll try and keep this as simple as possible. So in your world, in your organizations, you have programs. Maybe you don't call them programs, maybe they're departments, but you have programs that you run that support your mission, and you have grants that fund the work that you do. So what do we mean by programs, and what is reporting for them important? Why is it important to report on those? So the programs reflect your mission. They are generally, they're the ways that you fulfill your mission. They're the things that you do to fulfill your mission. Let me give you an example of an organization I worked with. I had the privilege of helping the Vermont Women's Fund get launched over 20 years ago. And early on, we had 3 missions. Well, we had a mission statement that had 3 goals. One was to raise money for an endowment for Vermont women and girls. We wanted to educate women and girls in Vermont on the importance and the value of philanthropy, specifically for women. And we wanted to give grants that were designed to help women and girls achieve economic and social equality in Vermont and self-sufficiency. So those were the 3 things that our mission stated we were to do, and they fall very nicely into 3 different programs: fundraising, awareness, and grant making. So it was important for us to see our income and our expenses in fundraising, in education, and in grant making. So that's the kind of reporting I'm talking about for programs. The people who, the reason you want that kind of reporting is for your annual reports, to communicate to your board how you're doing on your programs. For your managers, if you're a larger organization that has multiple people managing parts of the organization, they have to be held accountable to budgets and to profitability or to their expenses. And then also to identify program costs and accountability there. When we talk about grants, I'm going to use the term grants most commonly, but I want you also to understand that we're not just talking about grants. This could also apply to any restricted funds that come in. So in some cases, you may have donors who give you money for a specific purpose, and you're going to want to be able to track how that money is used as well. So grants and restricted funds are going to be used in today's discussion interchangeably. So why do you need to have your grant funding and expenses tracked? You need it for your periodic release of grant funds, for grant renewals, to track other restricted funds, and we want to be able to track these things entirely separately from your program reporting. So the other thing that I've done in this presentation, in the slide deck, to try and keep this simple and clear, is when I'm using a QuickBooks term, I've tried to underline it like I have here with class and customer, so that you know when we're talking about QuickBooks terminology versus your world terminology. So in QuickBooks, we're going to be talking about classes, which are going to tie out to our programs. We'll see that in a minute. But let me tell you a little bit about how classes are designed to be used in QuickBooks. They are designed to track programs or departments. So if you are a store, let's say a store, and this is a little bit different, but if you're a store and you have 3 locations, you have your income, your expenses, and you want to see how store 1 is doing in location here, and location 2, and location 3, but you're also going to want to see the total. So the classes would be store 1, 2, and 3, and you would be able to silo all the income expenses for each of those neatly into one silo, so you can get a total on each of those separately, and then also the total. So that's the way classes are designed to work.
Can I ask you a question? In the case of the Women's Fund,
yep,
were those 3 different goals of the Women's Fund that you described, would they be also classified as
correct?
Classes? Okay.
Correct. So in our organizations, and we'll get to a real example of this in a second, we're going to be talking about not stores, but the thing that's nice about the stores is the income is all the same. Each store is going to have exactly the same income, and they're going to have exactly the same expenses, and that's really how classes were designed. So they have rent, staff, supplies, cleaning. So because those are going to be all exactly identical, it's a nice example. And it's not, that piece of it isn't quite so clean when we're talking about programs. So classes are designed so that you can run profit and losses reports on them. They're designed so you can do budget reports on them. You can run balance sheet reports by class. And if you're used to working in QuickBooks and you're working in reports other than your financial reports, your balance sheet and your profit and loss, it's the most powerful filter that exists within the database to filter any of the reports. So any report that you might run by vendor or by item or by sales, any reports that you find in QuickBooks, you can filter it for one or multiple classes. So it's very powerful in that regard. The customer list, and that is going to tie out to our grants, and we'll talk about that more, are designed to track where your money comes from, who's giving you the money, who are your customers, who's providing the grant funds, the higher organization that does it. Who do you send your invoices to when you're calling for funds? You can run profit and loss reports by customer, which is something a lot of people don't know. You can also run budget reports by customer. And more importantly, you can run accounts receivable reports. So you can see at any given time how much money you're expecting to come in from a given organization. And that becomes really important when you're thinking about managing your cash flow. How does your, if you've got payroll to reach next month, having those invoices in QuickBooks to see, okay, this organization, I know we're going to be getting their check next week, so we'll be all set for taking care of payroll, so we don't have to worry about things. And you can also run sales reports, which a lot of you probably don't do, but if you use them, you can run sales reports by customer. Okay. So here's an example of a profit and loss report by program. And so this is the We Care Community Foundation, and they have, and I know this is hard to read, so I apologize because I made this as big as I absolutely could, but I'll sort of walk you through it and tell you what we have going here. So here are 5 programs that they've defined for this organization. The first is research, student education, teacher education, and then they have something called management, which would be their overhead or administrative costs, and then they have fundraising. And so you can see each of these programs defined out, and you can see the profit and loss down here at the bottom, and then the total for all of these. And what I want you to, again, I apologize that you can't see this, you have to take my word for it, but at the bottom of the teacher education program, they have a net profit at this time of year of $127,000 and change. So basically what's happened here is we've taken all of our expenses for the organization, all the income, and we've tossed it all up and we say, okay, show it to me by program. So it's come down into these silos for the different programs that the organization runs. Now we're going to take the information and we're going to toss it all up in the air, and we're going to say, okay, come down in terms of funding sources. Here is a report. Now we're looking at a small section. We're just looking at the teacher education now. And we can see here that we have now 3 funding streams for teacher education. We have a Bayshore City grant, we have the Bayshore Times grant, and then we have some unrestricted funds that are also supporting this. And what is nice and neat for the accountants in the room is that when we come down to this lower right-hand corner for the total costs for education, teacher education, it's the same number that we saw in the program report earlier, that $127,000. $739.11. It's exactly the same. So here you have the ability to take your information, looking at it from a program perspective, and then turning it around and now looking at it from a funding source. And that's really the toughest nut that we're all trying to track here. For those of you who think three-dimensionally, I'm going to offer an example, and if you don't get this, don't worry about it, but think of it as a three-dimensional tic-tac-toe board where you've got your chart of accounts and you've got your programs on this going this way, and then this way you've got your customers. Depending on how you look at it, you can, at the cube, you can see it either by program or by customer. Okay, so how do we set up QuickBooks to make this happen? Because that's what we ultimately want to be able to do. So, as we said before, we're going to use QuickBooks to track our we're going to use QuickBooks classes to track our programs, and we're going to use QuickBooks customers to track our grants and any other restricted funds that we receive. Each class needs to be mutually exclusive. So when I come into organizations, most often people gravitate to using the class feature to track the things they want to track separately. And unless you're clear on programs and grants, I find most often when I go to an organization, the class list is a mixture of customers or grants and programs. And that in very few cases that actually can work, but for the most part, because classes need to be mutually exclusive, it gets a little more complicated pretty quickly as you rely on grant funding, and let me show you exactly why. So this is why classes aren't enough. So if you have a program like teacher education that's funded by 3 grants, if you're going to do that in your class list, you're going to have 3 subclasses within your teacher education, which starts to make the class reporting complicated. Could be doable, but it's not very clean. It gets really complicated and really difficult when Grant A, that also funds teacher education, also funds other programs like research and student education. So the best thing to do is to just not even try to do them both in the same place. Just separate them out so that you're using your classes for your programs and your customers for your grants. So what do these class lists look like? So here's an example from WeCare. And again, this is hard to see, but so at the top here, we have the teacher education and research programs. They have here listed a program, education program administration program silo that they want to fill. And I'm guessing that's because they have grant money specifically to do that. But that would be the administrative cost for these other 2 entities. And then here's their management. They've got some other things I'm not going to talk about, but they also have a category called fundraising. If you're not already tracking your fundraising income and expenses separately, I recommend you start doing that. It's something that's generally required if you get to an audit.
Can I ask a question?
Absolutely.
We need a microphone.
Oh.
We need a microphone. Thank you, Mike.
Okay, about fundraising, you say income and expenses?
Yeah.
So, but doesn't the fundraising income, doesn't that get spread across the programs?
Ultimately, it certainly can be used for the programs, but when you're being audited, if you have an annual audit for your organization, they're going to be asking you to identify and isolate your fundraising. I believe it also is required on your 990 to track that as well.
Is that separate from grants? Or?
Yes. Grants would
So would this be like fundraising? I understand fundraising expenses, so you've
Yep.
got advertising, you know, whatever. But fundraising income, I mean, whether it comes from individuals or from events or from whatever, I'm still not clear on that.
So yeah, so those would be examples. So you might do an annual appeal to the people who have supported you in the past. Every year you go out, there's costs associated with that for mailings, for printing, for stamps. And then the income that comes in through that initiative would be part of the income. If you were doing an event, you would have the tickets for the event and then the expenses associated with putting the event on.
Okay, but then when you want to apply that to a program, how do you do that?
Let's talk.
Oh, I'm sorry.
No, it's a very good question, and so.
Because I mean, when checks come in, we just put them in the general fund.
Correct.
Because we don't have restricted funds, so.
Yeah.
That's the answer to your question.
Yeah, but but you're saying that you want to connect the expenses for a specific effort. So like if I have a direct mail campaign, I want to say how much did I spend on that direct mail campaign and how much did it bring in?
Right, yes.
Okay.
Right. Then so you actually, if you may not do anything more than just leave it in the fundraising category. And your programs may run at a deficit, but you'll know that the fundraising that you raise makes up the difference for that. So you want to see your true cost of your programs. If your programs have fees associated with them, you would put those income in the program. If you have specific grants for the programs, you would put those in there, and then your expenses would be listed underneath that. Very often, your programs are going to run at a deficit. They are going to rely on the money that you earn or you raise through unrestricted donations to fill that. So you may not see these programs with a zero or an income, a positive income. They may in fact be negative. Does that answer your question?
Yes.
Okay. Thanks for that question. That's probably helpful for a lot of people. So this is the QuickBooks class list. So for the Vermont Women's Fund, we would have had philanthropy, education, we would have had fundraising, we would have had grant making, and we would have had an administrative class. And also, you would probably, so those would be the ones we would have. Okay. So back in QuickBooks, we have our customer job list. So we've been referring to the customer list. Those of you who are very comfortable and familiar with QuickBooks know that it's really called the customer/job list. And the idea behind this is so that you can have one person or one entity that you bill for, but you may bill them for multiple things, either multiple projects or multiple grants in our case is what we're talking about. So these are the grantors for the We Fund organization. They have the Health and Human Service Agency here supplies 4 different grants for research and student education. And then here's a Phillips Foundation that provides grant money on a periodic basis as well. And the last thing that we have here that you are going to want to have is something called unrestricted. Excuse me, that sounds sort of funny to have a customer named unrestricted because it's not a grant, but you're going to want to track, you're going to need that as I talk about things moving forward. Okay, so how do we use the customers and the classes? And again, here, just to be crystal clear, in your world, the programs, you have programs or departments, and they're going to be the same thing as QuickBooks classes. And then you're going to have grants, and they're going to be the same thing as your customers. And then the jobs will be the grants are going to be the jobs, the customers are going to actually be your organizations you get money from. We'll talk about that a little bit more too. So again, what we're going to be able to do by doing these differentiations, we're going to be able to do profit and loss reporting on our programs, we're going to be able to do budgeting for our programs, and we're going to be able to do some balance sheet reporting. I don't see a lot of organizations doing balance sheet reporting by their programs, but you may have a need to do that. In terms of what we're going to be able to do with our customer job list, again, we're going to be able to do profit and loss reporting, we're going to be able to do budgeting, we're going to be able to do our AR and cash management that we talked about before, and it is important to note that there is not any budget balance sheet reporting for our customer job lists or for our grants. Okay. So now that we have our list set up, how are we going to actually get this information to play out the way we want it? And that's going to happen at the daily transactional posting process. So when you're actually entering your transactions into QuickBooks, or your bookkeeper or your staff member that's charged with doing that, we're going to have to do something that you may or may not be doing. And every transaction is now going to need to be assigned a customer, job, and a class. So that's something that may be new. And we're going to have the first section, the first line here, your bills, credit card charges, and your checks. Those are going to be the expenses. That's how you track your expenses. So again, we're going to have customer, job, and classes. I'm going to show you examples of that. On your invoices and your sales receipts for your grants, you're going to have how you're recording your income. You're going to have, again, customer, jobs, and a class. On your deposits, in cases where you maybe have done an event, you may not need to do an invoice or a sales receipt. It may be sufficient just to deposit the money in lump sum. And we're going to also show you where to put your customer and classes there. And then also on journal entries. And the journal entries are useful because, and come into play because very often at the end of the month or the reporting period for your grants, you may find that you have spent more money in one grant than you had, or not enough in another, so you may need to move funds from one grant to another, so you might choose to do journal entries for that. Question?
That's great, because that's, I think, what I finally did figure out with the journal entries. My biggest challenge is I'm like with you so far here, but because of the specific events that are supposed to, for instance, go into CCTV Productions or Common Good Vermont, I have found that the only way that I can do that is through a journal entry, since you can't indicate a customer and a class or a job through one particular event situation. The only way to allocate those funds is through a journal entry. And I was hoping that that was okay.
Well, so it may be that may be exactly the right way to do it.
Yeah.
My bias is always going to be to try and record the source transactions where they need to be and not to use journal entries.
Yeah.
But in nonprofit accounting, you absolutely have to look at them from time to time.
Yep.
And
I have a lot.
And the other thing that happens is that as you're strolling through the month, you have a target of hitting X number of dollars expended for grant A and grant B, but you're going to drive yourself crazy if you try to monitor where you are at any time during the month on that. So at the end of the month is the time, or the end of the quarter, whenever it makes sense for your organization, you're going to evaluate your profit and loss by grant, and you're going to see whether, oh, I put too much payroll to this grant, I got to move it over to the next grant, or so you're going to be doing some juggling around, and it's not worth trying to keep track of that on an ongoing basis, because the bigger you are, the harder that gets. And so really at the time of reckoning, whether that's monthly, quarterly, or annually, that's when you're going to find you will do some juggling between your grant funds based on what's required and what your resources are. So that makes sense?
Do you have a follow-up?
Yeah, that's a great idea, unless you're required to report monthly.
Well, you might have to do it monthly.
Yeah. Yeah.
So some organizations do that, and hopefully if you're in an organization that has to do it on a monthly basis, you've got the resources to have accounting staff available to do that, because it does take time.
Oh, so I need a staff. Okay, good.
Well, maybe you are the staff. So let's look at some specific transactions. So expenses. Expenses get recorded in one of three ways. You either enter a bill, you enter a credit card charge, or you enter a check. I've chosen a bill as an example. Each one looks a little different on the top half. What's important really is the bottom half. So in this case, in any of the expense forms, the bottom half that you're filling out, you're going to have your accounts that you post here, you're going to have your customer job name posted in here, and you're going to have your class or your program listed over here. And this is the name field. This field up here in the bill or on a credit card statement is going to only be a vendor. You can't choose a customer here. You wouldn't want to. This is, you're paying money to a vendor. It's not paying it to a customer. But this field here on the bill and the customer in the form section of the document is actually called the source name. So you'll find when you're running reports, sometimes you'll see funny things happening, and you want to know that there's a source name on a field and there is a customer name. Okay, or this is the name, but in our case, the customer name. Okay. So next, invoices and sales receipts. So on an invoice, like in the vendors, the bills, you can only put vendor names. In the invoices, you can only put a customer name. And this is, in fact, the source name on an invoice. So, and this comes up when you're running reports. You're going to see when you run a report on your expenses, what you're going to find, if you haven't already seen this, actually, can we go back to the last slide?
Yes.
The reason I talk about the source name versus the name field is that when you're used to running a detailed report on expenses, you're used to seeing the vendor name show up. Once you populate the customer name in here, this starts to populate the name field. So you're going to be pulling up an expense report, and it's going to be showing all your grants in it, and you're going to say, what is going on here? And it's because, and I don't know why this happens, but this becomes the predominant name field in the report. And I suspect that's because of how we're using it in this higher order dimension of being able to run profit and loss. You want to be able to do that. if you're running your expense report and you're looking at your details and you want to see your vendors, what you want to do is you want to add the source name field to the report, and you will then see your vendors. And I'm not going to talk about how to do that. Those of you who need to do that, who are the accountants, probably already know how to do that. I'm happy to talk about it later, but that's something to be aware of. So invoices. So the sales, the field up here is going to be your grant. So you're going to choose your customer name with the specific grant that you're billing for. And then here is where you're going to be putting your class list your class for that money. And this could be that you're getting, this grant could have multiple, so this is the city grant, and it may be that the city grant is funding, as we talked about earlier, multiple programs. So you may have a second line down here that talks about funding student education or research, perhaps. So it's perfectly fine to have multiple programs show up here. So let's talk about deposits. So on the deposits, we don't have a name field. What we have is this received from field. Here's the account field, and here's the class field. In this case, this is Christina Jimenez, and she's given a restricted fund to fund research in the amount of $5,000. And what is, and so you may have, in this case, you may want to put an actual individual's name here or a foundation. It could have been maybe the Phillips Foundation. The other thing that you will do is if you're having an event, so you raised money through a concert or a dinner or some kind of auction or an event where it's money that's coming into the organization, it's unrestricted, you can use it for anything you want to. This is where you would use the customer that we created called unrestricted, so you would know what those funds were. And two reasons that's important, both for the unrestricted. Also, you generally, if you're selling tickets to a musical event, you don't want to put every single ticket purchaser's name in your customer list. You want to keep that simple. So unless you have a real compelling need to keep track of that information, lumping them together in unrestricted is a great way to go. So then we've got journal entries, and we were talking about here, we've got the accounts that we used. We've got the grant, the customer job. Again, it says name, and that says name instead of customer job because in this form you can put any name you want in there. You can put a customer, vendor, or an employee's name in there. We want that to be a customer name. And then we have the class here that would also go in. So let's review this, what we've got going here. So the programs equal the class list. So the programs that you run are going to be populated in your class list, and you're going to add administration or overhead, and you're going to add fundraising. Your grants are going to be reflected in your customer job list in the following fashion. The customers are going to be the funding organization, so who actually is awarding you the grant, who are you sending the invoice to, and who is writing the check to you when it comes in. And the job is going to be the name of the specific grant itself. And you're going to also add an unrestricted funding customer to your list as well. And when you enter your transactions into QuickBooks, you're going to enter a customer job and a class in every transaction. This is going to enable you to toss your data up and sort it and have it come down by program so you can see clearly your programs, or toss it all up and say, okay, show me my funding by grants, and you're going to have it come down in those grant reports that we saw before. So how do you get to these actual, we got a question?
We got a question.
Excellent, thank you.
Good morning, you're on the air. Do you have a question?
I do.
Great, we're so glad to hear from you. Go ahead. Would you like to ask it?
Yes. So in terms of the review, we have a situation where we may have one parent who pays tuition, who pays after school fees, and also who makes restricted donations and unrestricted donations. So how do I capture all that using your method?
So you're a school, it sounds like, or a daycare center.
A school.
Okay. And parents are paying tuition to your school for their students.
I want to listen to Wendy's answer.
And they also may give restricted donations?
They do.
And what was the third thing that they might do?
Give unrestricted donations.
Okay. So without knowing a whole lot about your organization, the only thing that I would say you absolutely have to do is you can use the same customer name for the tuition and for the unrestricted gifts in all likelihood. You may or may not want to do that, but you probably can do that. You would want to create another. If they're giving you restricted funds, you're going to want to create another job underneath that parent's name for the restricted fund. You're probably going to want to say what that's for. So for playground improvement or whatever. I'm also going to take an opportunity to just send a word of caution out to those of you who are receiving gifts of an unrestricted nature. Well, first of all, does that clarify that for you?
A bit.
Tell me more.
Well, I can picture all of our parents who pay tuition are on our customer list.
Yep.
And so for this particular one, or anybody wanting to do restricted and unrestricted, I then make see, their children are listed as jobs.
Right. That's great. That'll make it easier.
So we've got the customer as the parent.
Yep.
We've got the jobs as each of the students.
Yep.
And then I'd have another job as the restricted intent of their gift.
Correct.
Well, and then
if you wanted to have an unrestricted job as well, you certainly could do that. You may or may not find that necessary.
What may I not find necessary?
You may or may not want to add a third job called unrestricted gifts. You might be able to just put the unrestricted gifts into the student's name, or you might want to have a separate one. It depends on what kind of reporting you need.
Okay.
That clarify that?
It does.
Okay. I'm going to digress a little bit.
Thank you.
I'm going to digress, take the moment, because that question is perfect lead in. Especially for those of you here that are small nonprofit organizations, be very careful about accepting restricted gifts. There are benefits, but the obligations and the funding reporting for restricted gifts gets very complicated. And donors with the best of intentions wanting to see their playground get built because it's really important to them, it's something they value. If you can figure out a way within your organization to encourage those gifts to come in an unrestricted fashion, but let them know that you have a priority to improve the playground and when that's going to happen, you are going to be in a much, your reporting and your accounting is going to be so much simpler. And here I am, I've got my controller hat on, I'm the person keeping track of all this. I'm the one that really is going to be burdened by managing all these funds, so that's the bias that I'm presenting. And so if you can direct restricted gifts to come in an unrestricted fashion, you are going to be much better off. And there are absolutely cases where the restrictions are so cumbersome that you should just simply say no to the money. That being said, putting on my executive director hat, you and your controller are going to go back and forth on when is it appropriate and when is it not. And there is no one right answer. But just be clear that taking in restricted gifts, especially from donors for very specific causes, gets very complicated and cumbersome, and you can spend a lot of money just tracking it. So,
Thank you.
Lauren Glenn. So we have, I think, a follow-up question from one of our viewers.
Great.
In the wide world. Can payroll also be designated to a customer through the creating paychecks function?
Yes, absolutely. Great question. And so those of you who have hired an outsourced accounting service, payroll service to do your payroll, I've got some bad news for you. Doing this, separating things out from a payroll service by program and by customer is very arduous. It's a huge, the more programs and the more grants, the harder it becomes. It's very, very difficult. the simple solution, and when you use Intuit's internal payroll, whether you're using the tax tables to do your own payroll, where you're paying your own taxes and doing your own forms, you can set it up so that it'll automatically allocate a number of hours, a percentage of time, however the formulas work, or at the end of the month if you need to make some adjustments, you can move things around so that you are reporting. And the payroll, if you have to turn the certain features on in QuickBooks, but if you, just like in the other the forms, and I probably should have had an example of this, you will see that there's a place to put a customer job and a program in payroll when you have the right features turned on. So that's without a doubt one of the things that QuickBooks and their payroll service does brilliantly.
We have another question, and we have about a half an hour or so.
Okay.
Just a quick follow-up. Will benefits also be spread?
Yes, and when you're doing QuickBooks, it burdens your taxes and your benefits. Okay.
So can you also then link a class to the payroll? So if you
I said programs, I meant classes and programs synonymously.
Okay,
Yep.
so so if you're paying 30 people, but some work for this program and some work for that, you can separate them out.
Right.
Great.
I think we're still in good time.
Great.
So how do you, the last thing I wanted to do in the review about generating these reports by profit, the profit and loss by program and by grant, is to show you how to get there. So in QuickBooks, when you go to the menu that says reports, you can pull it down and it'll show you these different reports, including the company and financial. And when you click on the company and financial, you get a drop down that lists some more reports. I couldn't capture that in a screenshot, but the two that you're going to look for is the profit and loss by job and the profit and loss by class. The job obviously is going to be our grants, and the class is going to be our program. So that's how you actually generate those reports. Okay. So questions. So we had questions. More questions on that. Anybody else on that one? Okay. Okay. So now diving into the broader topic of fund accounting. So if you're relatively new to nonprofits, your world of fund accounting may be, how do I account for grants? And that's certainly a part of it. But fund accounting is actually a broader topic than just accounting for grants and restricted funds. And what fund accounting is the ability to generate financial reports at any point in time for your organization based on 3 classes of funds that may be flowing in and out of your organization. First would be your unrestricted funds. Next would be your temporarily restricted funds. Those are your grants and your donations that are earmarked for specific things. And lastly, your permanently restricted funds.
Before you describe that, could we take this question?
Absolutely.
Good morning, you're on the air. Do you have a question for Wendelyn? Hello? Hi there. Hi.
Hello.
Hi. Do you have a question?
Can you hear me?
Yes, we can, very clearly.
I had a question that, okay, it may be that it's going to be answered in this next little segment, and it just has to do with running a P&L for a specific period of time. If you have a grant or a restricted fund that you get late in the year and you obviously want to track it into the next year, how can you run a P&L if that's what you counted as revenue, whether it's restricted, you may have a class or a job attached to it, but at the end of the year it gets folded into your retained earning account. And how do you keep track of it starting in the new year? Does that make sense?
Yes, and we're going to talk about, we're going to answer some of that. I may not get to all of that, so I'm going to actually ask you to hold on to that question, and if we don't get that answered, if we can't get to it today, give me a call in my office and I can talk to you more about that if we don't get to it, but some of that we will address.
Okay. And we'll send out Wendelyn's contact information.
Okay, great, thank you.
Yes, great, good question. Thank you. Getting into the deep...
Diving into the weeds. Well, and fund accounting.
Yes, exactly.
So What my experience has been is that organizations that are, up to about 10 million can run and use QuickBooks pretty effectively. If you're larger than that, then the ability of QuickBooks to really handle fund accounting starts to fall down and break apart, and your peer norms are going to be demanding more than QuickBooks can give you. So if you're comparing your financials to your colleagues and organizations that do like things, you're probably going to be looking at moving to something like Blackbaud or a true fund accounting software. But the beauty of QuickBooks is for those of us that are smaller organizations, we have an affordable accounting system that can really do most of what we need it to do. And so that's what we're going to be looking at, how to use QuickBooks to track fund accounting. And as I had mentioned, it does a great job from a profit and loss standpoint. So what do we mean by unrestricted funds? These are some examples. So annual campaigns and unrestricted funds, this is the money we love. We want as much unrestricted money as we can because it gives us a great deal of flexibility, and it's easy to track because there isn't a lot of tracking that has to be done. So those are the two reasons why we really love it. Annual campaigns would be an example. Typically events, unless you've run an event specifically for, like it's a scholarship dinner dance or you're raising it for a specific fund. We're doing we want to improve the playground, so we're going to have a raffle or a silent auction around that. So events typically are going to be unrestricted with those exceptions. Fee-for-service contracts like Medicare. Now, I know that not everybody agrees on this, but my experience in Vermont, and I'm not a CPA and I'm not an auditor, but my experience has been that most organizations treat fee-for-services as unrestricted grants. So if you have a contract with Medicare that says, we're going to give you $100 for every student that you do an initial assessment on, then all you have to do to get those funds is just document that you did in fact provide those services. Medicare is not going to ask you to show them how much you spent to do those services. So that money really is treated as unrestricted funds. Temporarily restricted funds are going to be your state and federal grants, foundation grants for a specific purpose, capital campaign donations, and board-designated funds. I want to talk a little bit about board-designated funds because they're something that is often underutilized, but it's a very useful strategic tool for boards and executive directors to utilize. And what they are is when you have a situation where you have some extra cash reserves in your organization, you can actually have a board motion that says, we want to take $10,000 for the next 5 years and set it aside for an anticipated computer system overhaul. So we know we're going to have to completely redo our computer system. We're going to start setting aside that money for that. And that preserves that money for that future expense. On the other hand, the nice thing about it is if the roof suddenly caves in and you have to put a new roof on the building, the board can then say, oops, we're going to need to they can make a motion that says we're going to release the computer funds and allocate them for the roof repair. So it's a very useful strategic tool that a lot of organizations use in a very effective way. And then permanently restricted funds. And these are going to be your endowments. So this is where, like the Women's Fund, we actually looked to raise a permanent pool of money that was going to throw off and generate income that we were going to use to make grants on a regular basis. You see them for scholarships. Sometimes organizations have a general endowment that they can use for operating. So the income from the endowment can be used either for a restricted or a non-restricted manner, depending on what the organization needs. So QuickBooks and fund accounting. As I mentioned, it has its limitations. If you're an organization up to about 10 million, you probably can make this work. And it's not a hard cutoff, but at some point it does start falling down. So it's very effective at running profit and loss reports, but balance sheet reporting, not so much.
Is there a question?
There is a question.
Great.
So Beth has a question and asks, is it possible to reorganize existing books to use this system? For example, we have been designating the grant by class, but Wendelyn's system makes more sense.
So Yes and no. It may be that the easiest thing to do is to do a slow transition. So sometimes, yes, that's really hard to tell. Sometimes you can repost things depending on how much data is in there. Sometimes you can just transition. So as new grants come in, you transition them over to the customer job list and you clean up your program list. But you have to deal with the grants that are in progress, so that can get messy. And sometimes people do just start a whole new file. I generally try not to start a new file because I think you're always going to lose some valuable comparative history when you do that. So that's probably not a very satisfactory answer, but in the context of what we've got going here, I'm going to have to leave it at that. So recognizing revenue becomes a really important question in fund accounting. And on the strictest sense, from a grant and a restricted fund definition, you're going to need to recognize that the auditors are going to tell you that you can only recognize revenue after you've spent it. So you have to spend the money, and then you can post the income to your profit and loss. So what do you do in the meantime? Because the money's here. And then the reality of that, but you can't do that on a perpetual basis. That's the place that starts to drive you crazy. So we have to figure out how to bring the revenue in a way that makes sense, but also how we're going to report out and keep things, how we're going to honor this requirement in the course of the year. And the reality typically is more like this, that you record the revenue when it's invoiced. So like in that grant we saw before, they had $127,000 of profit in that grant, and obviously they haven't spent it all. In that program, they hadn't spent it all. What you do absolutely have to do is at the end of your fiscal year, you have to true up your grants to report a zero income. That's the question that earlier caller had mentioned. You have to take that revenue out of, if you have excess revenue for a grant, you have to take it out of the profit and loss so that at the end of the year, your grants show a zero balance, that income and expense are equal.
Can I ask a question?
Yep.
I thought, strictly speaking, you recognize grant revenue as soon as you were notified.
Oh, so somebody's going to, I think that you have to recognize it as a receivable, or that technically it's a receivable. I don't think you recognize it as income. And this is where I may not have this exact, Jane, you might know more than I about this.
Yeah,
but
we will put it on our balance sheet.
Right.
But not on the profit and loss, so it's temporarily restricted until we do some of the deliverables and we draw it down monthly.
Right. Yeah. That's where we're just going. That's the next slide gets into that. So you're right. You have to record the fact that it's been given to you, but it doesn't show up on your P&L. Okay. And I actually even see some organizations that some do and some don't record that at that time. Sometimes they do it when they're actually invoicing for their drawdowns. So, and you might have a memo to a note on your financials to reflect that, well, we have this, we also have X number of promised funds or something like that. So you're going to take that money out of your profit and loss. Where are you going to put it? So you're going to take that money and you're going to move it into those deferred revenue accounts that we haven't talked about yet. I'm going to show you those in a minute. You're going to take that excess income, as Jane was talking about, and move it onto your balance sheet as a deferred revenue. It's going to be a current liability. It's money that you are obligated to spend in a certain way at a later date. And so that's what you're going to do with your excess income. In terms of being able to reflect on your balance sheet how much of the resources and equity that the organization has in terms of unrestricted, temporarily restricted, and permanently restricted funds, you're going to use your equity accounts to reflect that. And here's an example of the special balance sheet accounts that you're going to want to have available. So here is your unearned deferred revenue other account. So this organization has $62,500 of money that it has received or invoiced for that it has not yet expended. In this case, they have everything in one deferred revenue account. I actually find most organizations are better served by expanding that to reflect at least by program the unearned revenues, because from a management standpoint, you want to know, you want to look ahead and see how much deferred revenue do I have available for specific programs. And you may even want to have it not only just by program, but you may want to have each specific grant listed in there as well, although that's that's not necessary. You can actually get that information by having them all lumped together by program. So that's the deferred revenue tool that you'll use for that. This is here, the next line that says unrestricted retained earnings in all caps is the QuickBooks defined retained earnings account. For those of you that are very familiar with QuickBooks from the accounting background, you're going to know what that is. I'll explain it to the rest of us in a second. But you're going to want to create at least 3 more equity accounts that are going to be unrestricted net assets, you're going to want temporarily restricted net assets, and you're going to want permanently restricted net assets. And in this organization, they have use restricted net assets, so those would be grants, and grants are foundation or private restricted grants. And then here's where they have their board designated endowment. They're using this as a quasi-endowment for future use. Okay, next.
Yeah.
So a couple of things to show on a very simplified profit and loss. So again, speaking to those of you who don't have a strong finance background, what you're going to find in any given period that you're looking at your financials, you're going to see a link between your profit and loss. I want to explain the link between your profit and loss and your balance sheet. So here we have, at the end of this fiscal year, so this organization has $771,000 in net income. And you're going to see that show up on the balance sheet, the next slide, down here in an account that you won't find. It shows up on the balance sheet throughout the year. This is your net income. So this will always tie out to your profit and loss. If it doesn't, then there's something wrong with the data file. But almost always you're going to find this to be true. So this is the end of the year. This is December 31st. Our net income ties out to our profit and loss as we would expect. This is the QuickBooks retained earnings class. And this organization happens to have a balance here. Typically, that wouldn't be the case. On January 1st, QuickBooks will automatically take this $771,000 and add it to the retained earnings that exist currently, in this case, the $228,000. So the retained earnings then, and again, these are QuickBooks classes or accounts, and you can't change them, you can't muck with them. QuickBooks will just do its thing and bring it up here. What you will then have to do at the end of the year to record your fund balances in terms of restricted, unrestricted, and temporarily restricted, is you're going to have to do a journal entry on January 1st that moves the $900,000 from here into the different buckets that are here. Now, if that's like, how am I going to figure that out? That's if you have an audit. Your auditor will help you figure out exactly how to make those journal entries and what monies go one place or another. If you're a very small organization, you may not even care about this at the moment. So if this is, spinning your head and you're small, under $100,000, this may or may not even be relevant to you. For the large organizations, I really needed to just talk about that. Good. Questions?
862-3966. Kate, questions? No. Good. Okay. And feel free to call us. We're standing by. All right. Next steps.
I don't have a question, but.
Yep.
Thank you for answering that net income line and how those tie together. That's been a question for me for years. Thank you.
You're very welcome. It's a simple thing, but I think for those of you, again, who come to your organizations from doing the work that the organization does, it's a quick little tie out, and that's often the kind of work that we do with boards when we're doing board trainings, is just helping them understand how the financials tie together. Why do we have the program set aside in this fashion? Why do we have the grants set aside in a different way? So that's.
Was one of your assumptions in this is that we're all using QuickBooks for nonprofits?
No, absolutely not. And many of you won't if you're a fairly small nonprofit, under $100,000. The cost, well, no, the answer is no. But if you're not, and you don't know about it already, you can be using it. And there's some advantages, not a whole lot of advantages, but you can get the QuickBooks Premier for Nonprofit through TechSoup for, I think it's $45, and you have to be registered with it. So it's actually, you can get the Premier version of QuickBooks Nonprofit for less than you can get QuickBooks Pro.
But the problem with that is that if you want to use it for payroll, then you have to still pay so much per person or a yearly fee, I find with that.
With the Premier versus the Pro?
No, just if you get it through TechSoup. You can't do payroll unless you pay them.
I think that's true no matter what you're using. I think even if you're using QuickBooks Pro, you're going to need to use the.
You got to pay extra to do payroll.
For the payroll module.
For the payroll tax tables, and you know there are some people who say, well, we only have 2 people, and we try to do it without. I actually don't work with organizations unless they're using the QuickBooks tax tables because it's so cost efficient and it keeps you out of trouble.
Let's take this question. Good morning. You're on the air. Do you have a question for Wendelyn? Hi there.
Hi.
We're ready for your question.
This is the Common Good Wendelyn Duquette?
Yes, it is.
Okay. My question is when you say you want to move the revenue at the end of the year to the deferred revenue account, I take it then if you have spent some of that revenue, that you're only moving to the deferred account, obviously, what is remaining that hasn't been spent from the restricted grant revenue or whatever. Is that correct?
That is correct, exactly.
Okay, great, thanks.
Yep.
I have a question here.
Let me just take this next call.
Oh, sorry.
Good morning. You're on the air. Do you have a question for Wendelyn Duquette?
I do.
Thank you.
Can QuickBooks serve as a donor management system? We need one that will do mail merges and track donors by categories like parents, friends, grandparents, etc.
It can, and all the things that you're talking about, there are specific data fields that will allow you to track that. I think there are also some great software that integrate directly with QuickBooks if you find that you can't track what you need. But QuickBooks does have a mail merge feature in it so that you can do your letters through there. And if you can find that the information that you're tracking, you can track the type of donors you're talking about for sure. So yes, and sometimes people do that well, and sometimes it gets too complicated and they move to a donor software that integrates with it.
Thank you. Is that good? Anything else?
Yes. So what donor packets integrate well with QuickBooks?
So
we're going to find those and we're going to mail them to you. So we'll send you an email with some of those resources, okay? Great. Okay. We're going on to the next question.
Okay, so Jay Barella has a question. Can budgets be set up for each customer to help you track how you are doing on your expenditures?
Absolutely. That's one of the things that people don't realize when they're trying to do everything in the class list. They think that they can't do the budgets by customer, but you can absolutely run budgets by customer and by class, both in your organization. And again, just like we toss things up and we call for it by program, you can toss the budgets up and call for it by grant and funding source.
Was there any other question there, Barry? No. There were a couple questions that came in before the program earlier in the week.
I think we've addressed those.
Okay, great. So if there's still some time for outstanding questions at 802-862-3966. Barry.
There's a question.
Great.
From Beth. Could you share the donor database information with the group?
Yes. So let me just quickly. There's only 3 of them. There's something called Method Donor. Is an online SaaS software as a service tool that's available. There is GiftWorks is another one, and I think the third one is Donor Central that I've seen. So those are the three that I know of that integrate nicely with QuickBooks.
And we'll send that out to the whole group along with the materials that we've talked about today. Great. Next steps?
So what I'd like to do is, because we have the time and because you're here and this is all fresh, what I'd like you to do is take a few minutes and write down one or two things that that because of being here today, you're going to do when you get back to your organization to better improve your reporting and your use of QuickBooks. So if you could take a few minutes to do that, and then we'll ask people to share those if you're comfortable with that.
So in the meantime, while folks are doing that, I'll just also remind you that you can find out more on financial resources at the Common Good Vermont website. That's commongoodvt.org. We have a lot of them listed there, including past performances of Wendelyn for Finance Friday. And if there are particular topics that are important to you that you think we should be addressing at upcoming Finance Fridays in the fall, please do let us know by emailing coordinator@commongoodvt.org. We'll be sending out an evaluation and also materials from this session and resources for you, and we will do that by Monday. Anyone want to share their next steps?
Sure.
Okay. Jane Sheridan.
So we spread our benefits and everything on a spreadsheet. So I'm going to go, we're pretty sophisticated about everything else and figure out why we're not using QuickBooks in the way that we can.
Are you using QuickBooks Payroll?
Yes.
So there's probably something in your setup that's not happening there.
Yeah. Yeah.
Yeah.
Great.
We don't have a lot of spreadsheets, but that's one of them.
You've done good work, Jane.
Thanks.
Marie?
I'm going to go back and review our classes and our funds, where we put things in. Most of what we put stuff in now is unrestricted funds. We haven't had any grants to date that need that, but I can see we were just starting a new program that we're going to have to keep funds separate, so this has been extremely timely for me. It's been really great. And then I'm going to investigate the donor management software.
Great.
Great. Thank you. Kate, anything you wanted to add?
Sure. We generally report our income as a receivable, and we report the income at the same time. We put it on the profit and loss statement, and I think we might want to look at going about it the other way around. Put the income into a deferred revenue and recognize it as income once we have the deliverables. So I think that's something we'll look at.
I want to actually address that because while from the standpoint of actually recording it, that is the correct way to do it. I'm going to put my management hat on as a program manager, and when I'm looking at a profit and loss for my organization, and I know that we've got a restricted grant, I'm looking at the P&L. I am not. The method you're talking about, by setting it aside into the balance sheet accounts into deferred revenue, I'm not going to have on the P&L a view of the income that I expect to see in this current time period, my fiscal year. So I'm concerned about what's happening in my fiscal year in the profitability of my programs. I'm often going to be more interested in seeing even the anticipated revenue, even if we haven't spent it all. I want to know what's coming in and I want to see that on the P&L. So I might prefer to see it on the P&L and then have it trued up on a periodic basis, maybe quarterly if you're doing grant reports, or at the end of the year. So that becomes a situation. That's a classic example of where if you've got your controller hat on, you're going to want to do things moving to the balance sheet. But if you're in a management and you're trying to manage to a budget, you may want to see that in the P&L, even though technically it's not the way it's going to land at the end of the year. So there's no right or wrong answer there. It's just something that you should be prepared to have that conversation between the business office and the directors and the board members.
Great. Thank you. Any other next steps from the field?
Not so far.
All right.
Got something?
We have one more next step before we wrap up. Wonderful.
Okay. So Beth or Beth says she will share this with the bookkeeper and board and explore donor software.
Great,
Terrific.
excellent. I want to thank the people that have called in and emailed in their questions from remote locations. I know it's a little more challenging, but I really appreciate it, and it's certainly added to the richness of the discussion, so thank you.
Absolutely. It's been a pleasure to have you here, Wendelyn. And if folks want to get in touch with you, your firm is QuickStart. You're based in Stowe. We'll send out your contact information. We certainly appreciate your generosity in sharing what you know with us today.
My pleasure.
And thanks to those in the studio audience and to the CCTV staff and the Common Good Vermont staff. On behalf of all of us here, have a great weekend. Thanks for watching.